Good morning, everyone. Omar here from Sasco Digital Assets, and I have your weekly market update. And this is a big one. We just passed the all-time high of 66,000. As I record this, the price is hovering around 66,200. We hit 66,300. Very exciting stuff. Not surprising, especially if you've been following this channel. We've been calling for a breach of the all-time high around this time frame. And why is it happening? A couple of things. So, inflation. If unless you've been a hermit, you've been watching the news, you've been hearing about the supply chain issues, you've been hearing about loose monetary policy that's causing, the inflation in the economy. Inflation is a very dangerous thing. I mean, if you don't understand inflation, I would encourage you to research it, particularly research what happens throughout history when you have societies that have to deal with inflation. Some of our clients are individuals that have lived through inflationary times in Latin American countries, and they are very aware of what happens. And what really happens is you want to own assets because you want to maintain your purchasing power, because the money is becoming cheaper, the money is becoming debased, and it's becoming debased because the United States is just in a lot of debt. I believe we're up to $28 trillion in debt, and that debt has to be devalued because when that debt is being paid back, it's being paid back at a nominal value. So what happens when you have inflation? You have a lot of cheap money, an incredible amount of liquidity, and that inflation goes into assets, scarce assets particularly, and there's nothing in the world that's as scarce as Bitcoin, so it's particularly attractive to investors that want to maintain that purchasing power. And, if I'm an investor, and I believe other investors are going to be using the same instruments to maintain that purchasing power, then it becomes a growth vehicle, and that's what we're seeing with Bitcoin. The other reason is last week we talked about the Bitcoin ETF being approved imminently. It's a futures-based ETF. It was approved literally, I believe, the same day or the next day. And here we are. New York Stock Exchange has started trading it yesterday. And an incredible amount of interest, an incredible amount of institutional adoption taking place on that Bitcoin futures ETF. And we're going to continue to see additional ETFs over the next couple of weeks and months. So that's going to be really exciting. What these ETFs are doing, it's providing access to Bitcoin to new audiences that probably would not have considered it before. If you wanted to have access to Bitcoin previously, you really were limited to two choices, and that was to either hold it spot, which is the traditional way is buying it on an exchange and holding it either on the exchange or in a cold storage kind of hardware wallet. And the other option was to hold it in your 401k or in your brokerage account through GBTC and other closed-end type funds. An ETF makes it very simple, very easy to buy it just like you would buy stock. And so it's going to really be exciting to see, how it gets taken up, as people start buying it and trading it within their portfolios. And a third reason is the on-chain analytics. This is the thing that we've been talking about since, we've started. And the beautiful thing about on-chain is you can look at the data, you can see what's happening with Bitcoin, and you could trust it. That's the most important thing. You could trust the data because the data doesn't lie. That data is the result of the mining process, the result of the blockchain, the transactions, and it's secure, it's reliable, it's auditable, it's transparent. You overlay some price history on that, and you're able to kind of tell what's going to happen with the price. So we've been calling for a supply crunch. The supply crunch has been here. We're continuing to see it. And I'm going to show you what I'm looking at today. And you can see what I'm talking about. Okay, so what I have here in front of you is the percent of the balance of Bitcoin on the exchanges. And we can see that of all the Bitcoin, we started off about, this is around COVID time, March 2020. 17% of all the Bitcoin that existed was on the exchanges, and now we're down to 13%. And this trend shows no signs of stopping. Some major milestones here was, we had that major deflationary event on March 13th, 2020. That was when the global lockdowns were announced, and there was a liquidation across all markets. Fed stepped in, stimulus checks started pouring out of the treasury, and we started seeing, a lot of Bitcoin being bought up. This number trending down is a good thing for Bitcoin. It trended down all the way until May of this year. That's when China announced banning, a real gift to investors. Even though, I called it a gift to investors when it happened. People thought I was nuts. it turned out to be true because China, first of all, it was like the 150th time that China had banned Bitcoin in various ways. The interesting thing about China is that they haven't actually banned the buying, selling, and holding of Bitcoin. I've not seen that yet. And I believe the reason why they haven't done that is because you can't. It's literally impossible to do that. There's decentralized exchanges. The Chinese people will figure out ways to transact in Bitcoin and to buy Bitcoin and to hold Bitcoin. So I believe, this is my personal view, just based on, following the China bans since literally 2013, is if you can't ban it, they don't want to look foolish. So they're not banning it. Will that change? We'll see. They may employ newer technologies to try to detect if people are, using Bitcoin or transacting in Bitcoin. And so that could change. So in May, we saw an increase of the supply on the exchanges. A lot of investors got shooken out of their Bitcoin. They put it on the exchanges to sell it. But that was quickly bought up by mid-July, early August. That supply was pretty much gone. And, additional supply was bought up since then. And again, we're seeing that supply crunch really taking hold here. Next chart I'm going to show you is Lightning Network capacity. So what is a Lightning Network? Lightning Network is layer 2. It sits on top of layer 1. When we talk about layer 1, we're talking about the stable, secure, slow by design, but highly secure on-chain transactions that are taking place on a Bitcoin network. It costs more money to send Bitcoin on layer 1 than it does on layer 2 because you're paying for all of that mining security. You're paying a premium for it. When you're transacting on layer 1, it's incredibly secure because that's what it's optimized for, but it's expensive and it's slower by design because it's secure. So it optimizes for security, but it's trading off speed and it's trading off cost. What layer 2 does is it eliminates that issue by providing that layer 1 security, but giving you as a layer 2 user, and it's called the Lightning Network, but what it's giving you as a layer 2 user is instant payments and virtually free payments. Incredibly attractive. I was in Miami in June and it was announced that El Salvador was going to be adopting Bitcoin as legal tender, and they were going to be using Bitcoin through layer 2, through Lightning. There's a Chivo wallet that El Salvadorians are able to load Bitcoin onto. I believe the government gave everyone $35 or $30 worth of Bitcoin to get started. And we see that since that announcement, the amount of Bitcoin that's locked up in Lightning has gone parabolic. There's about 3,000 Bitcoin right now locked up, and this shows no signs of abating. It's clearly just a start. This gives individuals all over the world the ability to move value around the world instantly and virtually for free. So an incredible use case. This also takes away the utility from some of the coins that you hear about that, that market themselves as being instant and cheap to transfer over. Coins like Cardano, Solana, Ethereum used to be that. Ethereum now is way, way more expensive than it used to be. So what I expect to see happening is I see investors leaving some of those coins and coming into here, particularly if they're using Bitcoin or if they're using crypto for transferring value across the world. And I see this trend continuing. The next one I want to show you here is open interest. This doesn't reflect it right now, but we actually hit an all-time high of open interest. Open interest is the amount of capital that is being, there's a couple of ways to think about it, but the amount of capital that's being leveraged to buy additional Bitcoin. This is something to just keep an eye on. When these levels get really high, we have volatility. But the next thing I want to show you is that these levels are primarily short-based. So you have a lot of investors right now that believe that the price is too high for Bitcoin. They're taking out shorts. If you have too many shorts getting taken out and you have an influx of demand coming in, these shorts are going to get destroyed and you get what's called a short squeeze. And that's where the price really goes up. I'm not sure. I didn't look to see if that happened this morning. I don't believe it did, but it's going to be interesting to see how traders react. And by the way, we saw this in 2017, early parts of the cycle where the price was really running up. A lot of investors were betting against it, trying to short it, and they got absolutely destroyed lot of traders got destroyed. There were a lot of traders and a lot of investors that thought that the price was going to go below 30,000. If you were following this channel, we were telling you that's not going to happen because of a number of different reasons, primarily the fib and the on-chain, what the on-chain was telling us. And it didn't happen. And, when do the bears learn their lesson? I don't know. It's pretty interesting to see. But typically what you see happening is those bears then turn into massive bulls later on in the cycle, and that's something that we're going to watch for. And that's how we get to those really high levels, at 100,000 and beyond. So that's all I have for you. I hope you enjoyed this update, and be safe out there. It's an incredible time. Just in the last few minutes that we recorded this, the price hit 66,433, and it's continuing to move up. So I think by the time we have a video next week, it's going to be another, exciting one, and we're going to be at new price levels that we, are just totally anticipating at this point. So take care of yourself out there. Be good.